Great morning, friends and family. Thanks so much for being here. It's an honor and privilege, as always, to just pour into the community, into the family. I'll share with you truly one of the main reasons I'm doing this. I feel like most of April and a lot of already in May, I haven't been around. That might be my perception. The reason I feel that way and the reason I think that might be the case is I was gone traveling and really in-depth conferences for at least 3 weeks in April. I did an entire Joe Dispenza event, and then I was on the island, Ariel Buck Island, for Abundance, which there was a lot of people in person with me, but I wasn't able to pour into my online tribe, friends, and followers. And then, of course, now I'm headed to Croatia for a week. And my flight leaves in like 3.5 hours. So I had to carve out some time just to pour into each and every one of you here. And that's it. Just provide love, insight, answers any questions that you might have. Just note that I'm here for you. So there's Peggy and Luke. I'm so happy to have Luke here. Jay says you are traveling international today. Technically, yes, but it does happen after the markets have closed, Jay. So I do fly out. I fly out from JFK at around, I think it's 2:00. So our Nashville flight leaves Nashville, Tennessee here in just a little bit. Lynn, welcome to the party.
Yay. I feel like a winner.
You are a winner, literally.
I am a winner.
Yeah. So for everyone who's here, my girl Lynn right now, she won the closing contest last night or the day before, one of the last 2 days on Boeing, got the exact penny correct. So she won herself a $200,000 funded account opportunity. So just by guessing the end of the closing price, which is
Thank you, Dale.
So that's super awesome. That's amazing. So Lynn, hit me with a question. I'm sure you got one.
Oh, I have been thinking of many.
Sweet.
What would it be like to walk? Does anybody get a walk in the life of Jeremy Newsome for a day?
Sure. All the time. Yeah, all the time. I mean, I was the main reason I'm doing this is because I feel like I've been missing out on people like virtually, but I've had a lot of interaction with individuals one-on-one and like in group settings over the last few weeks in person. So yeah, I we could talk more about that, but text me. I mean, I have a lot of time available coming up in the end of May or some in-person stuff. So I'd love to have you over at the house.
Awesome.
Trade, hang out, do all the things. There's my girl, Emily. What's up, Emily? Luke with the perfect beard. I know you got some questions. Again, team, if anyone has any questions, throw them in the chat pane, unmute, video, whatever you want. Hilton's here. What's up, my guy? It's early where you're at, dude. Thanks for being here. It's like 5:30 over your mark neck of the woods. You're muted though, just in case. I won't be able to hear you, at least not yet.
Oh, sorry. Yeah, I'm saying it's 5:31 now. I'm just sitting outside so I can stay awake.
I'm with you. It's a little crispy, right? So it's gonna be a little bit too cold to fall asleep.
Yeah, it is. Yeah.
Do you drink coffee, Hilton?
No, I don't actually. I don't drink coffee.
Yeah, all good. Hey man, enjoy the outside.
Yeah, man. Thanks.
Do you have a question for me? Any way I can pour into you?
Yes, I do. I'll just go because I went through some of your videos and there's some stuff that I saw which I'm still trying to understand. One of them is being trapped when you're looking at the candles.
Yep, I'm still here. You're just cutting out, but I got you. So you're talking about candlestick analysis and charting.
Yes.
Yep.
Yeah. How to identify the trap trading.
Got it. How to identify a trap? That's an extremely specific question, but I like it. What I'll do, Hilton, is I'll answer it verbally and then I'll show you visually because I have my charts and everything pulled up on the back end. Because
I appreciate that.
Because I'm addicted and I love this stuff. So let's go look at it really. Again, I'll explain it verbally and then I'll go look at it. So a trap is when you can look at the candlesticks or bar charts or the type of, there's other types of things you can look at. It doesn't have to be candlesticks. But generally, when you're analyzing price action and you are able to identify the fact that people did something and they were wrong, and now they have to get out of that position. And usually people that get out of that position quickly will do so fast that the stock moves very aggressively. So I'm going to show you an example on a small time frame, Hilton. Let's go into Apple for a moment, because this was a really, really good day trade the other day on a 3-minute chart. And you'll kind of see what I mean. I'm going to pop into a 3-minute, and it was right. What day was it here? Okay. And yes, I do accidentally memorize all the trades that I take. There we go. All right. So let's just go look at this for a moment. I think this is a great, great example of what a trap is. So first and foremost, if I'm looking here on the 3-minute chart, Hilton, I'll notice a resistance just like that. So that's not extremely unique to go like, oh, okay, cool, there's a resistance. But really what stands out to me in this visual identification of a trap is notice the volume. So you have this huge, huge, huge volume spike. Now, I know a lot of you here know what type of volume that is, but go ahead and type it into the chat pane. For those of you who are very familiar with candlesticks, what type of volume? Is that buying volume or is that selling volume? And the answer is, yeah, bullish. Exactly. Winston typed it in the chat pane. That's primarily people who are buying, who are trying to get in. All right. They're getting into the stock and they're all excited about it moving higher because they think what's about to happen. They think that this is about to occur and that you're going to just rampage higher and that everyone's going to make a bunch of money and they're all excited. That's what they're expecting. So the question is, does that happen? And the answer is no, not in this example. So those buyers, Hilton, since we can see so many of them, how are they going to feel if the stock drops dramatically?
Well, they're gonna get sad, anxious, and wanna minimum.
Yep.
Their loss, so they're gonna.
That's exactly right, my man. So they're going to feel sad. They're going to be upset. They're going to want to minimize their losses. And since those are buyers, we all know here that if you buy a stock and that stock begins to go down, the only way you can get out of that stock is you have to sell.
Yeah.
You have to sell. And so here's the very next candle. Now, when this candle comes in, now what I'm going to do is I'm going to zoom in a little bit closer so we can visually see it. All right, because Peggy, this is going to be important for you as well, and for all my other traders who are here, and most of you are active traders who are here. But as we zoom in, what we now can see, and again, this doesn't mean that you have to take advantage of it immediately, but it means visually that every single person here could learn this, is if I can see this volume, and I can see the fact that those buyers got taken out, meaning the price action of Apple goes lower than where they all were buying. Those buyers are now scared, panicked, worried, terrified, upset, and they're going to begin to sell. So this means that I can participate in the downside action by either buying put options to make money as it goes down, or I can short sell the stock and make money as it goes down. And let's just kind of play it out for a quick second and see what happens. But this is the next, hour and some change. And so that was a nice little sell off on Apple. So you could have had the opportunity very nicely to interact with this on the downside. One last example, Hilton, is pop over here. One last example is now I can identify this as a trap for the bears. And so we go, okay, how do we know? How can we identify that there's a trap there for bearish traders? Well, there's a support here, number one. So number one, there's a support. And number two, we can notice that there was 1, 2, 3, 4 bear candles in a row. And then price action started going down, 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 down. There's a bunch of overzealous bears who began to short right there, right? Because they thought it was going to continue lower. And then the perfect candle formed. Hilton, what's the name of that perfect candle?
The hammer.
You got it, brother. Nailed it. So this is a trade that I would take bullish I would actually look to enter above the high of those bear shorts right there, and my stop will be nice and comfortably low, probably somewhere down here. And I'll be basing that on the fact that the stock already went down, and this is where most newer traders will actually go short. And most newer traders will go short down here, just simply because they want it to go lower. But this is a support. I can visually see that, and I can see that there was a trap here because of all the bear candles, the nice lower shadow, and then the perfect hammer. And this is what happens later is it does pop. And so again, when I say that there's a trap, this was a bear trap right there set for all the bears. And you'll notice that I wouldn't have gotten triggered in until after that happens, right? I would have gotten triggered in bullish there after it goes above the high of that bear candle, because now all the bears are trapped.
Interesting.
Yeah. So the answer is it takes practice and it takes questions like that, man. So you're welcome to always message me, on whatever social media platform and show an image of like, hey, is this a trap? And I can always tell you yes or no.
Okay, I appreciate that. I have one question for you there, Jamie.
Yep, hit me.
Okay, so that beer candle beside the hammer, what if it has closed below what if it has closed below the low of the hammer?
Good question. Yeah. If that closes below the low of the hammer, it's an entirely different pattern, right? Because now you do have some people trapped. Now all of those buyers immediately get hosed and there's zero hope for them. So at that stage, I would be okay and be comfortable to be a little bit more on the bearish side. Now, granted, obviously we do close below the low of the candle there. So if you take the trade bearish here, so you're trying to make money as it goes down, that doesn't mean that you're a bad trader at all. It simply means that you are wrong very quickly. And when you're wrong very quickly, you do want to switch and flip positions, right? If you get into a trade and then bang, I mean, you were wrong within seconds, you're going to want to get out of that position and look to go the other direction. So
I appreciate that, brother.
Yeah, you got it, man.
Yeah.
All right. So Luke, I'm going to help you with this one, Luke, because Luke says, I haven't been able to grasp the concept of making profits while stock goes down. You talked about puts and covered calls the other day. I just got the smackdown by First Republic and PACW. So let's go look at PACW for just a moment. This is Pacific West Bank Corporation. This is another stock that's essentially potentially about to fail. I mean, it's right on the verge. It's teetering. Today, actually, though, Luke, will be a little bit more on the bullish side, ironically enough. You had kind of ultimate fear yesterday. Now, again, I'm not saying that you have to do this trade, but from a day trade perspective, I'd actually be watching this to go bullish. And here's why. You have some of the biggest bear volume of history yesterday. And pre-market, so I know the market doesn't open for another hour and some change, but right now we're actually up a little bit. So we're up about probably 20%. Yeah, 20%. 62 cents from yesterday's close. So that means to me, Luke, is if we open above and we take out the high of yesterday, I'd actually be looking to probably day trade this bullish and just kind of watch it to be able to buy some shares, sell some shares, buy some shares, sell some shares and make a profit. But you and I are going to master how do you make money if a stock goes down? And we're going to talk about that right now. So go ahead and unmute yourself because I got some questions for you.
Do it.
All right, dude. You ready?
Maybe.
Let's find out. So first and foremost, Luke, thank you for your service. Everyone here, that this man is one of the Green Berets of Green Berets. He is a healer of souls, a saver of lives. He is an amazing, amazing man. So that being the case, what we're going to do, Luke, is we're going to walk through an example of how to make money as the market goes down. And I'm going to do so with like a real estate example, because you do know a little bit about real estate. And it's not going to be the perfect example, but I'm going to do my best. So let's imagine for a second, Luke, that you are a real estate agent and you sell a house. In order to sell the house as a real estate agent, do you have to own it?
No.
Okay, you're absolutely right. Obviously, you don't have to own the house to sell it. You can do the exact same thing in the stock market. Now, let's imagine, as the real estate agent, you sell a house and you make money from the house sale. You sell it for whatever price, it doesn't matter. That's irrelevant to the conversation, but let's just assume it's $300,000. The person that buys it from you, they bought it because they're a house flipper. It's their first time ever, or maybe it's their second or third time. but whatever. They buy the house from you because they want to fix it up, flip it, sell it, make a profit. Well, that doesn't work out that great, right? They don't really flip it. They don't know how to do contracting. They don't know how to build out decks. They didn't look at the AC unit, whatever. There's a bunch of problems with it, and they buy the house, and now they're kind of underwater. So then they try to sell it in a fire sale, and they call a bunch of people. And they can't figure out who to sell. And they're like, you know what? I'm gonna call my real estate agent who sold it to me. They call you and they go, hey man, can you buy this house from us? We're underwater. We're gonna sell it to you for $280,000. So $20,000 cheaper than whatever you sold it to them for. Now, if you buy that deal, right, you're buying it with some of the money that you got from selling it. And now you buy it for 280, and then you can do whatever you want to later. It's very similar to how the stock market works for short selling. What you do is, number one, you sell something that you do not own to someone who's a willing participant. And let's say you sell it to Tim. So you sell a stock to Tim who wants it, and Tim wants it for years. So he doesn't care about any of the fluctuation. You sell it to him and you bring in cash. As the stock goes down, you now have cash. You buy the stock lower than where you sold it to Tim off of the open market. When you make that purchase, mathematically, if you buy it less than you sold it for, you make a profit. So what I would encourage you to do, because you understand making money in stocks. In fact, ladies and gentlemen, my boy Luke made really, really good money on Meta. So he bought Meta a while ago and rode this up and did pretty well on Meta. So now let's just ask a mathematical question. If Meta's at 240 and you sell it to a willing buyer, why would they buy it to you why would they buy it from you at 240, Luke?
Why would they buy it I mean, it seems like it's almost peaked there, so I don't know.
Well, the answer is, what if it doesn't peak? All right. What if it goes to 300 in 2 years from now? Is that a possibility?
Sure.
So if someone, let's say Lynn, my beautiful girl Lynn, has a time horizon that's like, you know what? Meta's going to go up in 2 years. I want to buy some. I don't really care about the price right now. I feel like it's going to go higher in 2 years. You don't know if she's right. That's irrelevant. So you sell it to her. She's a willing buyer. She wants to buy it. You don't know for sure if it's going to go up or not. But let's say it doesn't. All right. Let's say it doesn't go up, but you sold it to her at 240. If at that point in time, now the price goes down, and let's just say it goes to 210, what is the equity change for you?
We got 30 further.
30. That is correct. Now that means that you would make $30 per share that you shorted, because you have the cash from Lynn at 240, right? You have her cash. You sold it to her. So now on your balance sheet, you're short. So you have to buy to cover to exit that short position. So your homework, my brother, is to paper trade the short position. Simple as that. Do you have a paper trading account?
I started setting it up, but I'm going to finish now that I have homework.
Cool. So yeah, that's your homework, is just open up a paper trading account. Just practice shorting. Send me some screenshots, send me a text, send me a picture, and fail at it miserably. That's fine. Doesn't matter. You can make money as it goes up or goes down. But if you short it and it goes higher, you get to see how it's going to be negative. But if you short and it goes lower, you get to see how it makes positive. And at the end of the day, one of the things that helped me learn how to short and make money as it goes down was just practicing it. After I practiced it, even though I didn't really understand it, 15 years ago, I still just started doing it more and more and more. And then eventually the concept clicked, because I like to make money and I don't really care necessarily all the time how things work. I don't know how cell phones work, but I use them all the time. So does that make sense?
Yes, it does. Thank you, sir.
Dude, my pleasure. Anything for you, man. All right. Dale says, thank you, Luke. Everyone's giving Luke the big happiness. All right. There's my boy, Chuck Jackson with the Bowflex behind him. That's your secret to staying jacked. I like it.
Actually, that's a hoist machine, but it's a little stepped up over a Bowflex. But you want to buy it?
Man. That was the nicest gym I could think of off the top of my head.
I'm trying to sell it.
So you said in trading education, there are some sharks I found. How have you been able to avoid taking advantage of people with success of RLT? Shoot, man. That's a good question. I mean, essentially, though, Chuck, it's not, that's just how I'm wired. You know, I don't like taking advantage of people. To be clear, I've given advice, thoughts, opinions, perspectives that didn't work. That's absolutely happened. But my goal in life has never been to take advantage of people. I've just never felt that way ever. I've always wanted to provide value. And honestly, my man, it's just kind of in my heart, my nature of nature, my soul of souls. I'm really not here to defraud anybody. I don't want people's money if it's negative energy. I just want to give as much love and happiness as I can. The sharks, man, there's so many ways you can screw people over in this market. And I've seen so many. Can I give you guys an example of how people will screw people over? This is crazy. I've seen this happen numerous times, and there's been so many SEC lawsuits, and there's some type of fraudster taken down like once a month, and on the internet. Anyway, I will see people take a position, both short and long, simultaneously in two different accounts. Right? They'll take both accounts and they'll only show you the winner. You guys even think about that, did you? So they'll just like, look at this win, look at this win, look at this win. I'm like, how? It's impossible to always have winners. I know this because I've been trading forever. And when you see people that only show wins and never talk about losses and never talk about getting punched in the absolute taint, don't listen to them. Because if you don't have a huge blowout at some point in your career, you're doing something incorrect and you're lying to people. And unfortunately, that's every single entrepreneur ever. I have a dear friend who just fell into a wiring fraud, right? And she lost hundreds of thousands of dollars, and it really, really sucks. And I feel terrible for her. But full disclosure, that's her first time ever getting just absolutely raked over the coals in some type of online financial transaction. So she's going to learn from that and she'll make the money back. She's an absolute legend. But it is unfortunate that that happens. But in my opinion, I have met zero successful entrepreneurs who haven't had some level of just absolute travesty. And if you haven't, you're not trying hard enough. That's the other fun part. You're staying comfortable, you're staying complacent, you're staying happy, you're staying normal, and you're not trying hard enough. Now, could you try really, really hard and succeed massively? Yes, but there'll be something in your life somewhere. I'm not saying business. Let's say you make $3 million, but now your wife hates you. And you're like, shoot, now I got to fix a relationship with my wife or your husband. There's just a thing that's going to happen. And it could be a relationship with a child. It could be the death of your mother or father. In my instance, it could be something that happens that you just didn't expect that will challenge you to see how bad you really want it. The reason I'm saying all that, Chuck, is because I've always shared my losses, and the people that don't, avoid them at all costs. Yeah.
Yeah, I've seen I've gone early on 3 months ago. I went through a lot of your videos, and I'm familiar with your losses as well, and your transparency, which is refreshing, very much so.
Thanks, brother. I appreciate that, man. I appreciate that. Winston, yeah, exactly, man. Exactly. Deepak, thanks for being here. Carrie says, Jeremy, can you talk a little bit about the sentiment and thoughts when you're either in a trade or about to get into a trade when there's compression or compressure, whether it's around support or resistance? This happens to me a lot, and I end up getting out for a small win because I get nervous or impatient. Yeah, for sure, Carrie. Let's go look at one that's happening right now. Type in a 3 if you guys want a trade that's going to move pretty quickly, very soon, like within days. This is Tesla. Tesla's going to have a big, nice move up or down. I do not know. Hopefully up. I have shares. I'm in this position long. I got some money to make back on FRC. So I'm going to do my best to be patient on all things. But here is Tesla. And I'm just going to hide my drawing for a second. So Carrie, the real question that you have honestly is, how do I hold my winning trades longer? That's the question, like within the question. Because if in this example, I'm going to draw a level for you. And I'm just going to draw this green line as what seems to me as a old support. And so right now, support. I tried to I don't know what that word was. I just made an F.
It's early. It's early, bro. It's early.
Support.
Really early.
All right. So we would agree most likely that this support level here on Tesla, since we're below it, it's now a new resistance. So that means to me that if Tesla breaks out of this really, really nice 4 or 5 day compressor pattern and trades up into here and gets to this level, I will be more inclined to take profits early or protect my downside pretty aggressively, because we're trading into visually what I would identify or what I would say is a support. So since we're under it, that's going to be a resistance. Then I would wait. I'll draw in a new color. Then I would wait for a retest into here and then a bounce higher for me to get back in bullish. Now that would be my plan for a long position on Tesla. However, since I can visually identify, in my opinion, that we are below support, we're below that support level. We're now in an old resistance. If this broke out to the downside, I would have to try my best to hold it longer. When I say try my best, there are some positions that you just have to let work. And even when you let it do its thing and it comes back and you don't make as much money as you could have, you will have gotten a little bit stronger. Your holding muscle would be a little bit better than it was previously because you tried, right? You went out for your 10-mile run versus your normal 3. So even though your legs were sore and your hamstrings were sore and your quads were sore, 2 or 3 days later, that soreness will go away. And now you've built up a new base. You've built up a new personal record. You've built up a new possibility of what's achievable. And in this situation, there's some level that you have to hold a trade just longer. You have to, even if it doesn't work out as good as you might want and goes against you and you end up losing a little bit of money. If there is ever a compressionary event and the trade breaks in what I would call the trend direction based on moving averages, based on lower lows, lower highs, all the things. Now we'll look at the trend in Tesla in just a moment. I have to hold that in the trend longer than I would normally. If it's against the trend, I always get out a little bit quicker. So with all those things being said, here's what I think the trend is on Tesla. Right now, I think the trend's bearish. And here's why. And again, I'm not saying that that's going to happen. I'm not saying that Tesla can't go higher. I have to use facts-based evidence when I'm trading. I have to say, what is the trend? And I go daily, weekly, monthly. And I look at all the moving averages, the 10, 20, 50, 100, and 200. And if we're below them, it's bearish. If we're above them, it's bullish. And that's it. Simple as that. That's the trend. Your job is to determine the trend. So daily moving averages, we're below them. Weekly moving averages, we're below them. Monthly moving averages, we're below them. Okay, 100, 200, we are above the 100. That's it. So since we're above the 100 on a monthly chart, that tells me, hey, don't be absolutely terrified, mortified, and petrified about getting into some Tesla long term, but know this, that it's going to be slow, it's going to be arduous, it's not going to be as fast as you want it to be because it's the only moving average that it's above. Here's the weekly chart. We're below the 200 simple and the 100 simple. So we're below both of those. And on the daily chart, we're below both of those. So in my opinion, I think Tesla's going to do this and then do that. Well, that might be a little bit too big of a downside. I think it would just do this, trade down to like 140 and then kind of like pop around. And that's what this kind of image shows me. That was a little bit of my perspective not that long ago. So if you're looking at playing Tesla long, I'm all for it. But just know that I would get out around 175 and start to look to go a little bit short. because that's the trend. And then if it works, it works. If it doesn't, it doesn't. Yeah, great question. All right.
Do you
guys.
believe it'll go, every gap must be filled?
No, I don't believe that at all. Yeah.
Okay.
Solid question. But now there's a lot of gaps that will fill. I would say most gaps, and I think I've thrown around the statistic, probably 89% of gaps will fill. So a vast majority of them. And I do think that this one is one of those that will fill. In fact, I know it'll fill. I wouldn't say in the next week, but this gap would absolutely fill within the next year, 100%, in my opinion. Within the next 2 months, probably 75%.
Yeah, I'm looking at the one to the left where you said it. Yeah, right there.
This puppy, I'm going to draw a purple line. So that one's gotten very close to filling, and that one will also fill for sure. So we're going to fill that gap also. So my thought is we probably do something like this, kind of fill this gap, trade back down to here, right? Because this is when everyone's going to short. All the newbies will short right there after it makes a new low. That's what new traders do. And so, Luke, for you, just as a reminder, right, you could sell it at 175 to a willing buyer who wants to hold it for the next 20 years, and then use the cash that you made to rebuy it at 140, and you make $35 a share on the downside. And then once it's at 140, then you can take the money that you made and buy more shares, take your profit and actually buy the shares in a long-term account. So yeah, anyway, saying all that to say, this is what I think is going to happen. That's just my opinion, of course, but the trend is bearish on Tesla. And I do own some. I own some long-term shares. So I do plan on getting into a hedge, which is I'm going to sell calls and I'm going to buy puts. So I hope that helps, Carrie. And Lynn, thanks for that question. Kara says, hey, Jeremy, thoughts on Bitcoin? Banks having solvency issues. Yeah. You're telling me this will be a sore subject for a while, but I'll keep pulling it up. That's fine. Yeah, banks are having solvency issues and no one cares. This is one of the weirder markets I've been a part of recently. So if you just got smacked around, to be fair, the US lost more money than you did. And they lost a lot more money than I did. When you're talking about these banks failing, so let's just go look at FRCB now, First Republic with the B's for bankruptcy. They just didn't care. I mean, there's another one just got absolutely raked over the coals. So you have First Republic, Silicon Valley, Signature Bank, 3 banks. First Republic was the largest bank failure since Washington Mutual in 2008. 2008, which that wasn't a great time for banks. Since then, nothing has failed except now. And there's an ETF called KRE. This is the regional banking ETF. Regional banking. So I do think that you can day trade this and watch this very closely for the next, few days, few weeks, because there is blood in the streets right now on banking, first and foremost. I think we all agree that there is fear. That's why I bought First Republic, because there is fear in the streets. There is legit panic. And I have been trained enough to know that at some point you have to buy fear. And I did buy other banks other than just FRC. So I bought Schwab, I bought Bank of Montreal. People kind of forget about those two, but I did buy other banks. And the ironic part is it wasn't a written rule, but one of the things that I said out loud for a decade was I never buy banks. And so the first time I bought banks, that's hilarious that I just lost $500,000. So whatever. All those things being the truth, what's fascinating about the banking situation, Kara, is I do believe right now that a lot of people are going to run to 2 things. They're going to run to gold and silver, and they're going to run to cryptocurrencies. Now, there's going to be some other things that they're going to run to, but Bitcoin, in my opinion, will not fail. It can't fail because there's no linchpin. There's nothing. The only way you can take Bitcoin out of the game is to shut down the internet for the world. That's the only way. And you can have your own opinions about that. That's up to you. But I'm letting you know mathematically, that's it. That's the only thing you can do. Shut down the entire internet for the planet. If that happens, you're not worried about Bitcoin, right? You're going to Luke's house because zombies are attacking and you're going to want some dude with some ammo. Am I right, Luke? So
Come on out.
Right. You're going to want to call some Green Berets for some protection if the entire internet of the world goes down. Fair? So all those things being said, I do think Bitcoin long-term is a good purchase. I've said for about 6 years, the best way to play Bitcoin, in my opinion, is to treat it like a savings account. Take some of your extra cash flow that you make from life, right? From your job, from whatever. Take some of that money and then throw it into Bitcoin on a weekly or bi-weekly or daily or monthly basis. And just slowly dollar cost average it, because it's so volatile that if you slowly DCA, dollar cost average in, you're going to buy some at a really, really good value. So even if you've been DCAing from the exact top, right? This is where everyone was buying Bitcoin, by the way. Everyone was buying it there. No one wanted to buy it there. But when everyone wanted to buy at 600,000, if you've been buying Bitcoin every single week from here till here, you're actually almost break even. You're almost break even, because this was a 75% drop here, but this was a 100% gain there. So some of your Bitcoin, you have had a doubling of your investment over the last 5-6 months. And that's just math, right? You can argue with me all you want, but math doesn't lie. So even though you've bought some really crappy value up here, your value got a lot better when it was down there, and especially down there. So anyway, long story short, I like Bitcoin. I always have. Ethereum and Bitcoin are my two favorite cryptos, and those are always my biggest crypto positions. Anything else I trade in crypto, Matic, Atom, Polkadot. What else do I have right now? I got some Shiba. They're just for fun. They're just to buy, sell, to be speculative. It's roulette for me. It's gambling. I do like to gamble. I do have a roulette class because I view, this will sound crazy, I know, but I think that every system can be beat if you have a plan for a short enough window of time. If you go and swim in the ocean for 17 hours, you're probably going to drown because you're so tired. If you can go in and play in the stock market for 2 or 3 hours, I think you can make money because your brain's not going to be exhausted yet. But I think if you go to a roulette table or a blackjack table or poker or whatever, if you go in there with a system, with a strategy, with an idea, I personally believe that you can make money and then walk away.
You're not holding any Pepe?
Not holding any Pepe. Nope, I don't have Pepe Le Pew. Nope, I do not. Valid question though.
So going back to the banking, I was looking at the XLF yesterday, and it looks like it's forming a head and shoulders pattern, like it might be getting ready to break down. Wondered what your thoughts were on that.
Yeah, so the XLF is the financial ETF. I mean, you're not incorrect. So that's essentially it. Like, it can get a lot worse. If anyone has the stones to buy it, this is where. But if you do buy it here, you want to buy it very small, or you want to get into some type of options position where you can easily hedge your position. So for example, a credit spread, bull put spread. I did not sell many puts on FRC. I did sell some. I literally only sold 3 put sale contracts, 3 for 300 shares. And I got put bankrupt shares at whatever, $9, $8, something of that nature. It wasn't a lot. So most of it I just bought with stock, and that was because of the volatility. So right now, XLF, this is the entire financial fund ETF. So that means for this to go to zero, every single one of 2 things has to happen. Spider Select Funds, which is literally a company that runs this ETF that does all the tracking in the back end, they do something extremely carnivorous, right? Where they're just going after people, and the whole fraud system is corrupt. The whole financial system is corrupt, or every banking institution in the US goes to zero. I mean, there are some financial products that really, if they go to zero, the whole world is going to be in a very, very bad pickle. I'm not saying it can't happen. I'm just saying it's just unlikely. So there are some situations and some products, this one being one of them, that I do not think is going to go to zero. If you play it with options, just make sure you have a hedged product of some kind, aka don't just sell naked puts, but get into some type of hedging product, or just look to play some shares. And this is the spot to be buying it. If, and as you mentioned, Greg, if it breaks this area lower, then yeah, you're absolutely right. There's going to be a big, strong head and shoulders. This one was a smaller head and shoulders pattern, but it did kind of play out, a few months ago. So yeah, absolutely right. Lynn says, how do you start your morning strategies? What tools do you use? That's a valid question, Lynn. To be fair, I kind of survive in the mornings. If I'm being honest. I just all right, make it. Make it. I've never been what people would call a morning person. Yes, I have energy. Yes, I'm excited about life. But if you come live with me for 2 or 3 days, it's like, I'm going to wake up at whatever time you need me to wake up at. And those first 2 hours, I'll do anything. Doesn't matter. I'll go on a 30-mile run. I'll ride a bike forever. I'll go swimming. I'm not going to enjoy it. I'm going to do it anyway. So to be fair, I'll do anything at any time, regardless of the pain or the consequences when it comes to like waking up nice and early in the morning. I'd prefer not to, though. I prefer to wake up at 7 a.m. Central, which is 8 a.m. Eastern. I prefer to go to bed, sleep around 11:30. So, 7.5-ish hours of sleep. I don't think waking up at 4 a.m. is extremely fantastic for most relationships. And
Do you find your strategies at night?
Yeah, the strategy specifically, it's not that hard for me because I do one thing and one thing only. When I'm talking about day trades, I look for a stock that's gapping. That's it.
Okay.
And I have two situations. I will go find the stock that's gapping really nicely, and I'll show you two prior examples. And then I'll just go look at Tesla or another common stock, and I'll see, is it opening above the low of yesterday or above the high of yesterday? So the strategy for me on a day trade perspective is really, really simple. So gap number one that was so obvious, I think every single person here could have made some money trading it, was Shopify. So Shopify actually had a good earnings gap yesterday. So you have tons of compression here, essentially a gap and go. It cleared a bunch of resistance. It opened above every single candle for the last year and a half. Every short trader was trapped. Everyone was looking for this one to go up. And if you zoom into a small time frame, right, this is a 3-minute chart. And there was two really, really, really obvious ways to make money on Shopify yesterday using the 10 EMA strategy. So that's my main focus, Lynn. I'm still doing the 10 EMA. There's your first bear candle. So entry had been there, stop would have probably been there somewhere, and there's your profit on the upside. And then later in the afternoon, here's your first bull candle closing below the 10, literally the first one. And you'd have shorted Shopify there, short here, stop there. You would have made money on the downside. So finding something that has a really good edge is primary focus number one for me. And I mentioned I would show all of you two gaps. So the other one was AMD. And AMD had a great move yesterday. So I didn't play yesterday, but the gap I'm referring to was the day before yesterday. So this is what it looked like when it was opening. And again, in my opinion, looking at this bull candle, so obviously it was opening below the low. It was opening below the low of 1, 2, 3, 4, 5, 6 candles. So that to me was a really good edge, right? People were going to be moving. People were going to be excited. People were going to be doing things. So that told me watch AMD all day because it's going to have really, really good edge. And so then you zoom into a 3-minute chart. And if we zoom into a 3-minute chart, you had, depending on how you played it, 1 or 2 opportunities to either make some money, lose some money, win small, lose small over here. About an hour and a half into market open, you got the perfect bull candle closing below the 10 EMA. So that was the very, very first one. So Luke is shorting it at 83. His stop loss is at 84. That's a $1 risk. Stock goes down to the prior low of day, which is 82, closes the position. So he risks $1 to make $1, and that's it. So I focus on stocks that are gapping. I focus on pretty common stocks that most people would like, oh yeah, I know that. Something weird. I'm just looking for the 10 EMA strategies. Tesla.
Do you have any programs that help you find gaps for the day?
Yeah, totally. A really good one that's free is Bar Chart right here. So barchart.com. I'll post this in the chat pane. Give me 3 seconds. Okay, so there's the chat pane. So you can go here, barchart.com. To start the very, very, very beginning, I'll just say, because I forget exactly how to get here. This is just a tab that I saved. Barchart. barchart.com. Is it bar charts? Yeah, sorry. So barchart.com, I spelled something wrong. And then you click on stocks. And once you click on stocks, you can come down to performance leaders, gap up, gap down. And you can go look at the gap up, gap down. That's one of thousands. I mean, realistically, not exaggerating. There are so many gap scanners. But that's the coolest part about the stock market. In real estate, the hardest thing is finding a good deal. In the stock market, the easiest thing is finding a good deal, finding a good trade, finding something where you can create cash flow today. Yeah. Winston says, this is a good question by Isaac. So Isaac said, I got killed on swing trades last month. What changed that made swing trading so bad? That's a valid question. So Isaac, me and you both, bro. When I say I got killed, I mean like headshot, just walked out of the barracks, didn't even make it off the lot. Like it was bad, man. Here's my opinion on why swing trading was so bad last month. If we go to I'm just going to go to the broader markets. I'm just going to go to the SPY for a second. We're still range bound, number one. Number two, you had 1, 2, 3, 4, 5, 6, 7 buying weeks in a row. So you're going to have to get some type of selling event. And if I go over here to the Qs, which is the NASDAQ ETF, the last month, if we go to this month right here, look at this very, very, very small range. We barely made it out of the range of March. So March, January, and February were pretty nice, at least in my opinion, because you had nice ranges. Look at how small April is compared to January, February, March. Huge ranges in January, February, March. April, no range, AKA no movements. AKA, if you're getting into a swing trade, it didn't do anything. And so it probably whipped you around and got stopped out. I mean, I got smacked in the face like 19 times in a row. I think I had 2 winning swing trades and like 8 losing swing trades back to back to back to back to back to back. Saying all that to say, Isaac, I can tell you right now, the 2 types of swing trades that are going to be best are option sales and taking advantage of volatility, because we are still range bound, right? This is the NASDAQ. We are still below the 100 simple on a weekly chart, which is there. And we're still above the 200 simple, which is there. So that means that you need to be, for my option traders, selling calls up here, selling puts up here, and taking advantage of all this chop that's about to start happening. We're about to get a lot more. So go look at the broader markets, go take advantage of option selling. If you can find some good setups for that, that's probably gonna be number one. And number two, and I'm not great at this type of swing trades. Quick ones, 1 to 3 days max, in and out, zoom down to smaller time frames and get in, get out. The reason I say I'm not that great at those type of trades is because I would prefer, if I have to be quick, I might as well just day trade. So day trading has been phenomenal, incredible, really all year, January, February, March, and definitely April. January, day trading was on fire. There was a few days that I didn't trade because there was no actual movement, but the days that did have good movement, I was very profitable for most of my day trades, but yeah, swing trades are awful. It's just bad.
Call me crazy, but today feels like one of those days where we're going to open up 318, 320 on the Qs. And I think we're going to rally into the close. I think you're going to see one of those big post down day rushes, unless the jobs report totally hoses things. But I wouldn't be surprised to see us finish 326 to 328.
It's possible,
Call me
man.
crazy.
I mean, right now we're looking like we're opening above the high because here's the thing, and the reason I think that you're right, Greg, about we could have a good bullish move is there's so much fear out there. And one of my trading mentors, you guys all have heard about him. His name is Dennis Dick. So Dennis Dick is one of the greatest traders on planet Earth, in my opinion. And I listen to everything he says. He's one of the trusted, worthy people. Like, he's just an amazing man. But anyway, he's like, what in the heck is going on in the markets? You're having bank failures in the financial system on the verge of collapse. Like the U.S. financial system's like teetering again with the whole debt ceiling and repaying our loans. They're going to have to kick that can down the road again, print another $1 trillion, all of the things. And the broader markets, aka the Qs and the SPYs, like whatever, they're down $1. You're having California is about to be just vanished off of thin air. Silicon, Signature, and First Republic, all three California stocks, one of the biggest states on all aspects in the US, and no one cares in the stock market. It is quite strange. So the fact that we're gapping up today after all of the hemorrhaging that took place yesterday, I agree with you. It wouldn't surprise me at all if we had a nice bullish day. I would say under 326. I would take the under, but I'm all for 322, which is 3 or 4 points of the upside. And last but not least, we are coming into a new full moon cycle. So if you like to be woo, full moon cycles do often play out pretty well on the buying, which is kind of wild, but there you go. Kara says invest in Tennessee. I literally can't disagree. Yeah, that's for sure. Chuck says, what is the thinking of the traders on both sides of a retest? That's a good question, Chuck. I'll answer that one later. Text that one to me. I can voice memo it to you. Yeah. OG says iron condors is an option for those who like tight ranges. Yes. Iron condors is a really, really fun trading strategy. I totally agree. Matt Westfall says, I want to say thank you for what you're doing. Oh, thanks, man. I appreciate it, dude. Drake says you broke some rules with the banks. You almost always avoided trading banks. I know, dude. I know. The one time I had one of my buddies, Yates, was like, what punishment are you going to invoke on your body for buying banks and losing a bunch of money? I was like, I don't know, dude, but it's coming. It's going to be a bad June. My poor body. It's just going to get wrecked. Now, Carrie asked a great question, and then I'm answer Sergey's. Carrie said, do you have an ad spot on Tesla at the monthly 100? Yes, right now I have a good till cancel EXT, extended hours, order for 100 shares at exactly 100. But me personally, I have $10,000 just sitting out there ready to rock and roll to buy 100 shares at 100 on Tesla. Is it going to get down there? Probably not, most likely. But if it does, I'm going to buy some, and I'm going to call Luke and ask for a loan, and I'm going to buy a little bit more. All right. Sergey says, Jeremy, nice to see you again. What do you think about using synthetic option positions for hedging long-term positions during earnings season? That's a good question, Sergey. And the answer is I'm a huge, huge fan. I'm a massive fan. That's one of my number one, if not, I would just go ahead and say that's my number one strategy or wealth creation in stocks. My number one, and that is collars. So when I say collars, some of you may or may not know what collars are, but I'll explain it to you really quickly. I have one right now on Pinterest. Thank God. And collars is when you own a bunch of stock, right? So you buy a bunch of stock and then you rent out your stock, bring in cash. That's right, Luke. You can rent out stock just like you can rent out a house and bring in monthly cash. And then I use that monthly cash to buy insurance. Because that way, if I can buy stock, rent it out for a profit, buy insurance above where I bought the stock price at, in my opinion, mathematically, I can create an unlosable position. So if you can not lose on a position and either make 2 to 5% or make 15 to 25%, why would you not do that with a lot of money? And that was an answer that I couldn't say no to, when I learned the collar strategy, 15 years ago. So has it been 15 years? This is insane. What is happening with time right now? This is crazy. But yeah, the option strategies have been around since 1973. So don't think that I'm cool. One of my guys who lives here in Nashville, Tennessee, his name is Michael Thompson. May he rest in peace. So Michael died of, I don't know the exact word. I'm just going to say throat cancer. It was throat cancer, but I think there's a more specific term for it. But anyway, I love the guy. He's one of my mentors. He's the best-selling author in the world on options. And he lived right here in Spring Hill, Tennessee. And so I went to dinner with him like once every 2-3 months. So he taught me a lot about collars a long time ago when I moved up here in 2012. David says, how far out do you buy your collars? So good question, David. You don't really buy them, you sell them. So you sell the call and you buy the put, but anyway, usually 2 months or less. So I would say 90% of my collars are 2 months or less. Yeah. All right. Mr. Gunn says, sorry, I'm late to the meeting. I had traded well last month and got 6 R's. Nice. However, I'm going back to trading badly, not following my plans and not cutting losses quickly. What can I do to trade well again? Implement a lot of pain. That's the answer. Because you said something very, very beautiful in that message, Mr. Gunn. You said, I'm not following my plan. You should always follow your plan. And when you do not, there needs to be some type of consequence, right? Simple as that, because you're getting complacent. You're like, I made money. I'm good. I don't have to do anything else. Like, no, that goes forever. It never goes away, ever. The whole, like, you got to stay disciplined. And the one time you don't, you'll buy a stock that'll go bankrupt. It's like, awesome. I'll stop talking about it at some point, but whatever, probably like a month from now. But the truth is, the rules, like whatever rules you have, whatever rules you've put down, whatever is in your plan, the time that you just go, nah, I don't need that anymore, I'm good, you're going to lose money. That's all I got to say about that, man. Implement some pain. Do 1,000 push-ups today and see how that bakes into your pectoral muscles over the weekend. If that's a really good, I think that's a good punishment. Peggy says no, but Peggy could do 3,000 with a 45-pound plate on her back. Right, Peggy?
Yeah, sure can.
That's right. That's right. Love it. All right, I'm trying to answer a few questions from people who haven't named yet. OG says, can you say the name of the options beast you just mentioned? So I don't think he's an options beast. I don't think Dennis trades a lot of options. But if that's what you're referring to, the option beast is Dennis Dick. He's not an options beast. I don't even think he trades options, but here he is. This is Triple D on Twitter. My boy. I'll give him shout outs all day long. This is the best trader in the world. Hands down. Just an absolute monster. But he doesn't trade options that much. He just trades stocks, just boring stocks. Ellis says, I would appreciate more information on option collars. Yeah, let me show you where to go. I have free content everywhere, and I'll show you where else you can go. So if you go to YouTube and type in collars, followed by the word real life trading, you'll get 3 or 4 videos. So collars, real life trading, and then boom, free, boom, free, boom, free, boom, free. It's all free. Doesn't cost anything. This is the best video on collars that's totally free. It's 5 minutes long. If you want 7 hours of really, really advanced stuff, just go to reallifetrading.com, click on online courses, and then hedging with options. This is not a sales pitch, although it might sound like one. This is one of the better courses I've ever made in my life, and it's $400. Truly, without exaggeration, I'm not exaggerating in any amount at all. If you have more than $50,000, you'll make this every single month with just selling covered calls. Minimum, right? If you have 6 figures and you don't have this class, you do not like money because it's so easy and it's so obvious and so simple. Ryan, what's up, my man? Just came back across your Twitter recently. Thanks, dude. Here's a question. Favorite book that you're currently reading? I don't have a favorite. I've had some books. I'm like, these are okay. I'll pull up my Audible. The one I'm currently reading right now for the 4th time is Outwitting the Devil. When I say reading, I'm listening. All of you've heard it. All of you've read it or listened to it. I know. So Outwitting the Devil. I have a new credit, so I'm happy for you guys to throw some good text me on some social media, a good book. I was reading Traction by Gino Wickman. I had someone request that book to me, and I don't love it. It's good, but it's where I was in business probably 5 years ago. if you are not extremely profitable in your business right now, or you're kind of getting it off the ground running, that's a great book for business owners. But I've done all the things in the book realistically. So I think I'm past that exact point. But traction. And then I just finished Can't Hurt Me by David Goggins for the second time. One of the things I learned recently, probably like 2 years ago, there was a podcast by Naval and Joe Rogan. He kind of changed my thought processes on books. And now, saying all that to say, I love books. If you want to read, you must. If you want to succeed, you must read. But Naval said, just read the same books over and over and over. It's like, if you like the book, read it over. Like, how many times have I seen the movie Forrest Gump? 1,000. And I'll watch it again today on the flight if they got it. I love it. I'll cry every time. Love Forrest Gump. But how many times have you read the same book again? And I was like, there's no way this is true. And I heard that podcast. And so I started listening and rereading other books. I was like, how did I miss that? One of the books that we're reading at dinner, trust me on this, we don't do it every day, but we try our best. When we have family dinner, we try to read a book. Every single person reads a chapter. So if you ever come over to my house and we have dinner together, you'll probably read a chapter of a book. The one that we're reading right now for the 4th time is Return to Love by Marianne Williamson. And when I'm reading that, I'm like, how did I not hear this last time? Really? So this was the big one. My takeaway last night, we actually had family dinner right after jiu-jitsu. I got back. I'm trying to get better for Harold, Luke. I get to meet Harold and I spend time with him next week. I met Harold on a hike and he's like, you look familiar. And I was like, yeah, I'm the guy's head that you were ripping off constantly for 6 hours in a row. But anyway, the big takeaway last night that we had after we got back from jiu-jitsu was your external perfection will only be in direct correlation to your internal perfection. Internally, you're already perfect, and your goal in life is to make the outside as perfect as the inside. I was like, whoa, let's go. Anyway, good stuff. Thanks, Ryan, for the message. I appreciate it. Team, I love it. Thanks I need to do more of these, apparently. You guys are really liking this. Yeah. So I'll do more. When I get back, I'll do another one just to pour into you and just be here to help you. If you do have trading questions, I know there's a lot of you that have mostly specific like stocks and option questions. Message me somewhere on Twitter, Chuck. I told you, shoot me another message. I'll answer your question about retest. I just want to be on time. I know all of you have somewhere to go and some things to do. But trust me, team, when I say this, I do this because I love it. This is what gives me energy. I'm going to be on fire the rest of the day because you all allowed me to be here and just pour into you. So from the bottom of my heart, thank you. Really appreciate your time. I appreciate your energy. And I'll always be here to serve you at the highest level possible. Thank you. Have a great rest of your morning. Enjoy your Friday. And until next time, love life, live life, and trade. You guys rock. Bye.